I'm Bobo and happy Chinese New Year! In this week's recap of the Hong Kong property market, we'll explore the pre-holiday lull, with developers introducing more incentives to attract buyers for new projects. We'll also look at the continued low transaction volumes in the secondhand market and highlight a few notable deals. And finally, we'll discuss the US interest rate decision as President Donald Trump calls for an immediate rate cut by the Federal Reserve and whether this could impact the local property market. Over the past weekend, no new projects were launched and sales activity was mainly focused on clearing remaining stock. Only 22 primary market transactions were recorded, representing a steep drop of over 90% compared to the previous week. Sales were scattered across a few developments, including Gold Coast Bay The Reserve in Tuen Mun with 3 units sold, Pano Harbor in Kai Tak with 2 transactions, and One Victoria in Kai Tak with 1 unit sold. Other developments included Belgravia Place Phase 1 in Cheung Sha Wan, selling 2 units, and 101 Kings Road in North Point, which recorded 1 transaction. The most notable transaction involved Pano Harbor, where a major buyer spent 168 million Hong Kong dollars to purchase 2 units with views of Victoria Harbor. The first unit, Unit A, on the 19th floor, measured about 1,900 square feet in size and sold for 85.52 million Hong Kong dollars at around 44,800 Hong Kong dollars per square foot. The second unit had a saleable area of 1,870 square feet and sold for 82.65 million Hong Kong dollars at 44,200 Hong Kong dollars per square foot. Other noteworthy transactions included a 1-bedroom unit at Belgravia Place Phase 1. This was Unit 11 on the 8th floor of Block 1A, with a saleable area of 264 square feet, which sold for 4.3 million Hong Kong dollars at about 16,300 Hong Kong dollars per square foot. At Gold Coast Bay The Reserve, a studio unit, Unit J, on the 22nd floor of Block 2, about 300 square feet, sold for 2.999 million Hong Kong dollars or 9,706 Hong Kong dollars per square foot. Despite the market slowdown during the Lunar New Year, developers are preparing to capitalize on potential buyer interest. With some prospective buyers using the holiday break to view properties, developers are rolling out attractive incentives to draw their attention. Many of these offers, particularly in Kai Tak's former runway area, include perks such as tourism and jewelry-related rewards from projects like the Knightsbridge and Twin Victoria. Next, the lack of standout projects in the primary market has done little to boost the secondhand market, which continues to suffer from low transaction volumes. Data from the city's 4 major real estate agencies show that only about 6 transactions were recorded over the weekend across the top 10 blue-chip housing estates. Agents noted that many potential buyers are using the Lunar New Year holiday to travel, leading to a pause in property viewings and transactions. This slowdown in activity has further dampened the secondhand market. However, agents also expressed optimism that the market would pick up after the holiday period. As the festivities fade, it is expected that the property market will see a modest rebound. Looking at recent secondhand transactions, it's clear that sellers are often having to sell at a significant discount to the market price. In some cases, this has resulted in noticeable financial losses. For example, a unit in City 1 Sha Tin suffered a 13% loss after being held for 8 years. This was Unit H, a high-floor unit in Block 38, measuring 304 square feet with a 2-bedroom layout. The most recent transaction price was 4 million Hong Kong dollars at about 13,100 Hong Kong dollars per square foot. The original owner bought the flat in 2017 for about 4.59 million Hong Kong dollars. After holding the property for 8 years, the seller recorded a paper loss of 590,000 Hong Kong dollars. Another owner in Ma'anshan's Vista Paradiso significantly slashed the price to secure a deal. The mid-floor unit in Block 9 measured 788 square feet and was recently sold for 8.3 million Hong Kong dollars at about 10,500 Hong Kong dollars per square foot, just above the 10,000 Hong Kong dollar per square foot mark. The original owner purchased the unit in 2016 for $7.5 million and listed it for sale in April last year with an asking price of 10.38 million Hong Kong dollars. After multiple price cuts, the unit eventually sold at a discount of $2.08 million or 20% below the original asking price. Despite this, the seller still managed to record an approximate profit of 800,000 Hong Kong dollars, equating to an 11% gain after holding the unit for 9 years. After the Lunar New Year, the release of purchasing power in the property market will largely depend on where interest rates are headed. While there's room for rate cuts in the US and Hong Kong this year, the timing of these reductions will be crucial. US President Donald Trump, who recently returned to office, has called for an immediate rate cut by the Federal Reserve, citing falling oil prices as a reason to ease monetary policy. However, some economists, like Christian Sherman of DWS Group, predict that the Fed will hold off on interest rate cuts for now, even though the likelihood of 2 rate cuts this year has risen to over 50%. Standard Chartered Hong Kong also expects that the Federal Reserve will implement its first rate cut of the year in the second quarter. The bank predicts a total of 2 to 3 rate cuts for the year, with each cut likely to be 0.25%. This would result in a total annual rate reduction of 0.5% to 0.75%. According to Referral's Chief Vice President Eric Cho, Hong Kong banks are expected to follow the US's lead, and he also believes that there's still room for local interest rates to decline further this year. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.